This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The world's largest group of oil producers, OPEC+, is set to announce another big increase of 411,000 barrels per day in production for August as it looks to regain market share, 4 delegates from the group told Reuters. If the increase is agreed, it would bring the total rise in supply from OPEC+ to 1.78 million barrels of oil per day so far this year, equivalent to over 1.5% of total global demand. This came when 8 members started to unwind their most recent output cut of 2.2 million barrels of oil per day starting in April and accelerated the production hikes in May, June and July, despite the extra supply weighing on crude prices.
China's oil imports from Iran surged in June as shipments accelerated before the recent conflict between Israel and Iran, and demand from independent refineries improved, analysts said. The world's top oil importer and biggest buyer of Iranian crude brought in more than 1.8 million barrels per day from June 1 to 20, according to ship tracker Vortexa, a record high based on the firm's data. Kpler's data put the month-to-date average of China's Iranian oil and condensate imports at 1.46 million barrels of oil per day as of June 27, up from 1 million BPD in May.
Moving on to the top news in the energy sector.
Russia's daily oil exports from its western ports are set to be around 1.93 million barrels per day in July, slightly down from June's plan, amid expected rise in refinery runs, Reuters calculations based on data from 2 sources show. On a daily basis, oil loadings from Russia's Primorsk, Novorossiysk and Ust-Luga, including Urals, Kazakh KEBCO and Siberian light oil grades, will decline some 3% in July from the current month. Russia's offline primary oil refining capacity is set to drop by 3.7% in July from June to 3.21 million metric tons, some 23.4 million barrels, according to Reuters calculations based on data from industry sources. The data is provisional and will be updated after the end of the month.
The Trump administration is readying a package of executive actions aimed at boosting energy supply to power the U.S. expansion of artificial intelligence, according to 4 sources familiar with the planning. Top economic rivals US and China are locked in a technological arms race and with its secure and economic and military edge. The huge amount of data processing behind AI requires a rapid increase in power supplies that are straining utilities and grids in many states. The moves under consideration include making it easier for power generating projects to connect to the grid, and providing federal land on which to build the data centers needed to expand AI technology, according to the sources. Next, we have the top news in metal markets. The threat of mass shutdowns across the automotive supply chain is fading as Chinese rare earth magnets begin to flow, though automakers and suppliers say production plans still face uncertainties and a continued risk of shortages. European suppliers have received enough licenses to avoid the widespread disruptions predicted earlier this month, but hundreds of permits remain pending, said Nils Poole, head of market affairs at Supplier Association CLEPA. The rate of issuance is accelerating and has risen to 60% from 25%, he said, but cases where the end users are based in the United States, or where products move through third countries like India, are taking longer or not being prioritized.
Gold fell 2% on Thursday, hitting a near 1-month low, after a US-China trade agreement boosted risk appetite and diminished bullion's appeal as a safe haven asset. Spot gold eased 1.5% to $3,277.17 per ounce by 0200 p.m. EDT, 1800 GMT, after dropping 2% to its lowest level since May 29 earlier in the session. Bullion was down for a second straight week, slipping 2.8% so far. The slowdown in geopolitics has offered an opportunity for investors to start taking profit because of the forward-looking prospects of some kind of kinetic war with China and the developments in the Middle East, said Daniel Pavilonis, senior market strategist at RJO Futures.
We will now look at the top news in the agricultural sector.
Chicago corn and soybean futures rose on Friday from multi-month lows, supported by short covering and a weakening dollar, analysts said. Grain market participants were also adjusting positions as they turned their attention to U.S. Department of Agriculture acreage, stock and crop progress reports on Monday. However, favorable supply prospects in the United States and worldwide remained a curb on prices. The most active soybean contract ended 8-1/4 cents higher at $10.24 -3/4 a bushel.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.